Good afternoon, everyone. Welcome. Happy Friday. It is June 20th, 2025. We made it through another week, somewhere on the horizon. Feeling pretty good. We'll take a look at the charts. My favorite episode, favorite show of the week. The end of week wrap up, make sense of everything. Of course, yesterday the markets were closed too because of Juneteenth. Some stuff moved today. Today was a kind of a consolidation in the global markets. We'll take a look, but that's going to be much of what we talk about at the beginning of the show. That's where a lot of the action was. To the downside in Europe and the parts of Asia. We will take a look, but let's go to the doc first. Boopity boopity bop. All right. So what's this guy got? He's got his fingers on one of the things that really made money this week. We'll tell you what the week was characterized by here. I think maybe you can guess. Today, Europe, Taiwan, and Japan all registered 2% drops. So that's really where the action was today. Again, Europe, we'll take a look at all these charts mentioned. Europe, Taiwan, and Japan down 2% today. And this week, characterized by a 10% rally in ARK, natural gas, and oil. So if you were in those spots, very commodity-focused week. We started with this on Monday or Tuesday, whenever the first show of the week was. But very commodity-centric week, of course, with the Iran-Israel tensions and the U.S. involvement. So, like I said, nat gas up 10. Take a look at that chart. We had a hunch on that chart actually last week where it was going to be during the bullish accumulation phase of SPY. They were going to exit natural gas. We'll see how that shakes out versus its 200-day moving average. Again, ARK looks really, really a lot better here. Not only just every day that Bitcoin's above 100K, not only that, but Tesla here above 320 looks exceptional for the ARK portfolio. And then again, of course, the oil, like I said, due to the geopolitics over there. All right, so let's take a look. Let's hop in the machine. All that stuff. So let's see. Hang on. If you have a ticker or something, put it in the chat. All right, here we go. Some single stock movers up to the upside, downside. NVIDIA down 1.1%. Apple, wow, finally a dog has its day, up 2.25%. Meta down nearly 2%. Amazon down 1 1/3. AMD up 1.1%. Coinbase adding 4% today. Google down nearly 4%. Palantir really dealing with that 140 mark over and over, but I think it's going to break through ultimately again. We've been right on that one. Palantir, stock of the year outside of ASTS and those, but in terms of major market cap and appreciation, it's been about Palantir. It's struggling with 140, but it looks stellar here. Down 2% for that guy today. And United Healthcare, still a pretty ugly name, down 2% today. Okay, so let's exit out of here. So here is the open. And really, so they sold off the open here. We opened at 598, and we actually sold off all the way. It continued. Had a little bit of a reprieve at 11 through 1 p.m., but really our bottom actually came at 1:30 p.m. We hit 593 in SPY. Did a technical, nice rebound tag to the VWAP of 595. That's volume weighted average price on the day, and we ended up closing below that. So not an amazing trading day. All the major indices were down. The Dow was flat essentially, but all major U.S. indices down about 20 pips or so. As I zoom out here and we go to our main picture, what we've been saying is I expect this market to get to right around June 27th. So by the end of next week, what my model basically has here is for us to be right around 592. So a lot of zigging and zagging next week, and then a convergence of moving averages here, essentially right at that 592 line, which is inside of where we are by $2 today. So, that's really, we're talking about 30 bips or so. So probably not a ton, I think, next week. And then that will set up into, in my opinion, mid-July for that move towards right around 610, where my cursor is here, 610 to 614. I think we will get new all-time highs, but that is the call here. All right, so that's the action on the macro. Let us now get into what really moved today. To the upside, it's going to be a short list. There were not many multiple standard deviation movers except U.S. home construction. This guy was actually up 2%, 2.1%, a big move. That's the only thing that they really bought. Multiple standard deviation today. This chart has looked absolutely horrendous. No reason to own this since that week that the Fed cut rates. back in December. Absolutely ugly chart. If you gave it the benefit of the doubt, you still dumped it in mid-January. This is coming off 52-week low with SPY back at $83 on April 9th. This just looks ugly. I think this has consolidation, bearish distribution phase ahead of it, down to about the $85 mark, I would say, in the next 1 week to about 10 days. I think this gets very close. Maybe not quite to a 52-week low, but I think it goes to the downside. A nice move up today, but I do not think it continues. A very ugly chart here. All right, so that was the only mover up. And you can see here they're exiting the winners. That obviously a loser that they entered in home construction. Look at this. Europe, we know it's been an absolute superstar. These are highs right here, June 12th at 78.5. And look at this. They sold it aggressively, quickly down to where are we at here? About 74, and a 50-day moving average at 74.81. So they sold Europe aggressively here in just 8 days. Now, what does one do? This is the Europe ETF. I think this is an oversold buy right here. I love this setup actually right here at 75. I think right around here, 74.80, anywhere, to be honest, under this lower Bollinger band, anywhere beneath 75.50, to me is a great entry. I think this has done, if you still do some of the stuff I follow with like the 15-day cycle work, this could have a little bit more to go in terms of a rough week next week and tries to find stabilization right around 74. Considering it doesn't usually get super stretched and extended above our 200-day moving average, especially with the RSI down here at 40. Last time I was here, spiking lower, it was on its way to oversold. So you typically don't want to see a massive exit in this situation. So I think maybe the entry is not going to be absolutely perfect, but in terms of risk reward, I think maybe have 1 point down, and the next rally here I think gets you to 77. So a couple of trades pop out. You could sell puts. Looking out at July, see the liquidity though. That's when you're going to want to pick the most liquid these days of the Europe ETFs. Otherwise, you could also buy call spread 75, 77, see what they pay, so on and so forth. But a couple trades stick out of this. I think it's may have, like I said, another week or so, but then more are going to hop on this train. It just simply got too stretched from the 52-week low. This is stunning, 62 all the way to 52-week high of 78. That's, you'd have to be in Europe for 20 years. Really, I mean, if you're really curve fitting here, doing it picture perfect, the trade was April to June, 2 months, and you got that percent we just said, 62 to 78 at 16 points. What is that, 25% or something like that? So pretty amazing from oversold to overbought. I still think the trade is alive. Choose your spots next week at 74 entry is wonderful. Next thing they sold out of, let's see if it was a loser or a winner. It was Taiwan. Taiwan got hit pretty hard today. There was news Taiwan Semi was down on U.S. Renegotiating or exiting contracts and semis for potentially getting out of Taiwan Semi, I believe was the headline. But Taiwan Semi, just so we know here, or Taiwan, the nation Taiwan rather, it peaked last year. This is very correlated with semiconductors, obviously TSM. This peaked last July. Crazy. It's been 11 months now at $58. And it's essentially been range bound, almost like a microcosm of what the semis have done. It's recently found its legs underneath it since essentially Cinco de Mayo here when it registered this overbought behavior. And now it just did it again last week. Nice to see. But it can't quite break above 57. No siree. So now what do we say in the short-ish term? I think this was a nice run. I think it hangs in around 54 for a little bit, but I do think this has a bearish phase for the next 2 weeks or so, and this heads towards about 52.23. I think the 200-day moving average here holds. It might get a little bit dicey, but I do think it holds. But I do think this is headed down. Probably spend a little bit of time at 54.5 and then start to go lower. But I don't love Taiwan for the next 2 weeks. Got a little bit more of heavy lifting to do. Needs more closes above 52. All right, and the next one, EWJ. They exited this one today too. A little bit of a sell-off here, down 1.8%. Again, this coming off of their highs on June 2nd at $75, and they sold it below the 50-day moving average. Sometimes fast moves like that happen. You get a gift and an entry to a star. Overall, again, similar with SPY hitting 52-week lows, EWJ did too. The 200-day moving average was kind of a brick wall here, right at 69 for a long time, and now starting to curl higher. The support is there at 69.60. I think they're going to try to accumulate this right at about, honestly, right about $71. I think from here, I think there is going to be a line of buyers. I think this holds. I think the next rally takes it to at least 73, if not, 74 half towards 75. So I think this is also getting interesting here. So the international market is in the focus, it seems here from all these charts. There's another thing that pops out. The RSI is the lowest here it's been since mid-April. That was just when we were coming off of the 52-week low. So they're not. There are more sellers than buyers in these markets right here. All right. Next, for the time being. Next, top 3 gainers of the past 5 days. No repeating charts. No better place to be than USO or US oil this week, up 10.5%. Absolutely crushed it. We highlighted this the other day, and we said, I wouldn't want to chase it up here. And the next day, it actually was down. This was what I was referring to. And then it started spiking up higher, and here we are, very close to highs. The 50-week high is basically 84.60 back in January, and we're $1 and change away. I'm going to repeat what I said. Of course, momentum can take this higher. It's very geopolitical driven. Who knows what announcements come out over the weekend? But to me, this chart, USO, this wants to spend some time around $74, $75. I think the 200-day moving average will hold. USO also, just to say, doesn't stay overbought for this long. So this has happened for 8 days. The last time we had this was to start the year, January 10th to about the 16th. And it took us to 52-week highs, and then the fervor runs out. I'm kind of expecting something similar here, unless this is a new norm, and I don't expect it to. 200-day moving average, also similar movements with a small curl up. I don't think it'll give way. I need to look at this massive increase in momentum in moving average to a crescendo 52-week high there, and then a fall off. You also saw bands constricting here, tight levels, and then boom, a big move. So I think this starts to come down. Can't picture, pinpoint when, but I do think this pays a visit to about 73 half to 74 half in the next 2 weeks. That's a heck of a move from here. Obviously that's $9 or so. So potentially a 10% move lower, I think, possibly in oil in the next 2 to 3 weeks. Yes. All right. Next, a big winner here this week, right behind U.S. oil. Natural gas up 9.7%. Today it gave back 2.3%, but it's had a very good week, up almost 10%. Look at the moves here. It's done some difficult work here with the 200 moving average. Couple of sessions above, couple of sessions below, now a couple of sessions above, and before here below, above, below. I think this hit fully targeted upside in the short term, right around that 18. My value here is 18 quarter. It had a couple of spikes, namely since May 12th for the past 5 weeks, 3 price touches above that level. So I think it's a bit rich. I think this one comes down to about $17 or so. So I do think the 200-day moving average holds, but I think this sells off. It's been a great week, up 10%, but I do think this might go a little bit higher. Maybe wants to retouch the 18 handle again, but I do think after 2 weeks or so passes, I think this has a 17 handle on it again, lower than here by about 40 cents. All right, but a great place to be this week. It was oil number 1, number 2 not gas, and this is interesting for a couple of reasons. Number 3 best place to be was ARK, up 9.33% this week to new 52-week highs today. It was up 1.4% today. This deserves a look, and we'll mention it at the end of the show too for the yearly recap. This is now involved. Absolutely amazing. Of course, trees don't go to the sky. ARK again overbought here for just small little smidgens here, day here, there. Not the kind of euphoria we saw back in November, right after the election, and early December. Just very, very small touches here, but new 52-week high. You technically do have bullish confirmation in terms of the RSI. At least it's over 70. I would like to see it pierce and get the highest on the chart, which is above 79, but we didn't get that. But a very nice looking chart. For me personally, kind of fully targeted right around that 65, 66 level. So I don't love chasing here. I think it's actually potentially heads towards $61. I love the stock, the ETF rather, tremendously. Amazing flows actually in relative strength in this from May 1st versus SPY. But I think this possibly has a pullback to about 61 or a 10% drop in the next 2-3 weeks. We'll see. That's what the charts are looking like to me. Similar with oil. So I'm seeing some give backs in some significant areas this week. All right, new 52-week high though on ARK. Very interesting here. And again, the all-time high on ARK back after COVID, Feb 21. This thing hit 160. So crazy times. Top three losers of the past 5 days. Now, these were not massive in terms of absolute moves. Like we're talking USO, UNG, and ARK all up 9 to 11%. Here, the losers were all 4 to 6%. The worst place to be was TAN. We were talking about this. We said this thing got to Chembait off the 200-day moving average hard, and that's just what happened. Today, down 1 1/3%. This thing absolutely still, pretender or not. Yeah, absolutely pretender. I think this has an ugly 2 weeks ahead of it. This heads towards $30 even. So that still pays another $2 lower from here. You know, you could buy puts. They're probably going to be quite expensive. You could buy at the money puts. You could sell the 33 calls, see what those pay. But a couple of options here, pun intended, as I see RSI going lower than it has for the past 2 months. Don't like this solar chart. I think it gets ugly from here, and a $2 sell-off is coming, and it's begun this week with a $6 decline, a 6% decline. The second worst place to be in this week was Mexico, down 6%, the same as solar. This is coming off a 52-week high on June 11th, 9 days ago. These guys at $62.40, same thing. All these winners, they got sold off to the 50-day moving average. It's been an aggressive week or so of selling in these areas, so otherwise known as rotation, lifeblood of a bull market, which you're getting in many areas globally. Mexico, I think this is perfect. Base is right around here, right on 58. I think this gets to 60 fairly quickly in a handful of days, and then about 2 to 3 weeks, I think this heads towards new 52-week highs at about $62, 62.5. So like this Mexico chart, nice little base here put in, and this breakout above 54 right here in April, looking very valuable here. This is also the lowest RSI it's measured since April. I think this is a flush, happening as we speak. That moved from 62 to 58. So some opportunities here for sure. Call spreads in that stand out. So we can also do the 60 delta calls. Acts like a little bit more than stock. So a couple we're selling the 58 puts. So those stand out as well. So Mexico, the second worst place to be this week. I think it's opportunity. And I haven't looked at this chart in a while because that wasn't having a ton of relevance in our recaps in terms of big absolute movers. But FXI, the third worst place to be this week, down 4.7%. Today, down 2/3%. This is what FXI looks like now. If you recall, these guys peaked in March at 38.73. I think it has an ugly 2 weeks still. I don't think it gets absolutely sold off, but I think this still heads to about where my cursor is, about 35 even or so. So about 1.5% or so to the downside. So a little bit zigging zagging, but not quite the setup in my opinion yet for China. But I think a little bearish. 10 days remaining or so for about 1.5% sell off to the downside. All right, top three trades of the past 5 days. If you were in USO long UNG, and long ARK, congratulations. You absolutely crushed the market this week. Again, oil, natural gas, and ARK led the way higher. Now time for my favorite part of the program. The top trades of the entire past year from last June 20th through today, June 20th. That's what a year means. And this is interesting because this is the tightest I've actually ever gotten the top three entries on here. This is the tightest it's ever been on the 52-week look back. It's all within 2%. So it's pretty remarkable. And one of them hit a 52-week high this week. So these things are hitting with gasoline as we speak. I'll mention which one it is. The first one, your leader, no surprise, IBIT, up 58%. I think what will surprise some is the margin of the 1 year look back. But here's the IBIT chart. Of course, as always, see how Bitcoin trades this weekend. IBIT peaked on May 22nd at 63.70. And now we've had a bit of a sell-off here down to 58.86. I don't love this chart for the next 1 to 2 weeks. I think this wants to go slightly lower to about that 56, 57 mark potentially shake some folks out some more. But overall, the chart looks wonderful and intact. I don't see the most amazing bullishness charted out for this pun intended again, for the next 2 weeks. But IBIT is your leader year over year. Number 2, and we just mentioned this, and this has not been in the top 2 or the top 3 for quite a while. ARK, number 2, best place to be from June to June, up 56%, which is actually a tie with number 3. So it was really, really tight here. ARK, we already gave our assessment. So if you're trying to get into a leader of the past year like this, I would really try and stick the entry here. I think this just looks a little bit stretched to me. I do think you get 61 in the next 2 weeks or so if you're patient, and that is going to be your opportunity, that 10% sell-off, to get into an absolute monster, the number 2 best performing ETF of the entire past year. And number 3, we talked about this on the morning show with Straza and JC and those about GDXJ, getting your entry to getting the right entry for a name like this. I think the show was Monday. I said you want to wait to about the 21-day exponential or the 50-day. They're very close. It's right around 67.5. That basically what triggered today, which is where we are. I think this base is, like I said, right around the 67 handle, and next stop right about 72 bucks. I think this is headed for new 52-week highs. So you can do 67, 72 calls. You can sell the 67 puts. You can buy the 70 calls. You can do a 67, 70, 73 call butterfly. You can. There's a couple opportunities in a leader like Gold Miner Juniors, like this one. Higher registration to the RSI than the others. More strength, more buyers and sellers, more uplift, more of a pretty chart like this one. I have been praising it, and it continues. So you like to see that. Other than that, I'll take a second to breathe here. And I think that's it. All right, y'all. Rock on and have a wonderful, wonderful weekend. We will talk to you guys on Monday. That was a lot of charts in 22 minutes. Peace.